I calculated if we go up 50% from here, we'll be around 5,300 by March. Goldman Sachs has come out, I think yesterday, saying that they see gold going to 5,000 if Trump challenges the Fed more. So I want to have your take on that. I know you don't look too much into technicals, but that would be interesting to start with.
Well, I do find the charts always quite complicated to understand, but they can be, if you already have a view on a share or a metal, it can be confirmation to what you're studying. So in this case, what you've got is a confirmation of your already held view. So I think that's, reassuring. If gold does do what you said, which I think it will, I mean, maybe not as fast as that, but if it does, we're going to get to a much higher price. I think you said 50%, something like that added, will take us to $5,300. By March, that would be incredible, wouldn't it? If we can get to $5,300.
Gold's momentum is accelerating on multiple fronts, and the developments go far beyond technical projections. The possibility of $5,000 gold is no longer dismissed as fantasy. It's becoming part of the mainstream conversation, with major institutions such as Goldman Sachs openly acknowledging the risk of a market shift if confidence in central banks erodes. What's more, the intersection of crypto and precious metals is beginning to reshape the narrative. Companies like Tether are already holding billions in physical gold, while even nations such as El Salvador are diversifying reserves into both Bitcoin and bullion. This convergence underscores the growing recognition that trust in fiat is waning, and tangible assets remain the ultimate safeguard. Clive Thompson, veteran financial analyst and commentator, notes that central bank accumulation, combined with shifting global alliances, is reinforcing gold's role as a true reserve asset. Alongside him, MarioInnecco highlights how delivery activity on COMEX and ETF flows reveals robust underlying demand. Together, their insights suggest we are witnessing a structural revaluation that the mainstream is only beginning to grasp. Now, we present the clips from their latest interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
I think I'd heard this before, but it just caught my attention because the FT reported it like top headline. Stablecoin group Tether holds talks to invest in gold miners. Boss of crypto company that posted first half profits of 5.7 billion has called the precious metal natural Bitcoin. I was reading the article and he says he likes to look at, he says people say that Bitcoin is the digital gold. He likes to look at it the other way, that gold is the natural Bitcoin. But whatever, I thought that was really interesting. I'm not surprised that the digital crypto or altcoin world is getting in bed, so to speak, with gold, especially the fact that gold is very stable, even though people think it's volatile, but it's not. The other thing gold has done, Clive, since Nixon closed the gold window, is that all fiat currencies have gone down over 90% versus gold. So it seems to be a good place to park your funds.
Tether's making over $5 billion a year in profit, and it's got to do something with that surplus profit. I think for the most part, it's buying treasuries with the surplus profit, but I think in a way, Tether would probably like to buy gold because they're into that tangible asset in a certain sense, i.e. Bitcoin in their eyes, and I think they'd like to diversify to gold. They probably don't quite dare do that, but going into gold miners is kind of more acceptable. Of course, they've got a lot more upside. If the gold price does go down, they only have to buy a small amount of gold. If the gold price goes up, they only have to buy a small amount of gold miners to get the same capital gain that they would get by buying a large amount of gold. So I think that's the strategy, to try and get exposure to gold through the back door. But I think it would be...
I have to correct you. It's a good correction. It says here, Tether has already amassed a significant position.
Oh, wow.
With $8.7 billion in gold bars in the Zurich vault, according to financial statements, which it uses as collateral for its stablecoin. So there you go. It's kind of Buy gold, Tether. The one thing about Tether that I will have to be honest with you, Clive, and the viewers, is that I have a problem with them because they've maybe that's changed, but they've never really done an independent audit. So it would be good if they did. I would be more comfortable with it, but that's very encouraging that they've got gold bars, in my opinion.
I'm just wondering about that because didn't they pass a law very recently in the United States saying that stablecoin companies had to have a regular audit? I don't remember.
Yeah, but they're not US based, Tether.
Okay, all right.
Yeah, I think they're Bahamas based.
You know, I know they've got a statement from auditors published every month, which certifies their holdings, but it's not an audit statement. It's not an audit of the
Yeah,
company.
yeah,
It's just
that's right.
it's an audit of their holdings, which is not quite the same thing.
Yeah, and then there's a tweet here or a post from Vince Lancy. I've interviewed Vince on the channel a couple of times. Yeah, if you want to follow him on X, it's at Soren the K VBL's Ghost, and it's kind of the same topic as gold and Tether, but this is more to do with El Salvador. And he says, Vince, I'm telling you guys, China and the US are working together to slowly deconstruct the global marketplace and create a bifurcated world. This is a complete a controlled takedown. And El Salvador is the proof. They're friends with the US and they're friends with China. The world's going gold and Bitcoin, or gold and crypto or stable coins, I would say, because it looks like El Salvador has bought gold as well, 50 million worth of gold. They've been buying Bitcoin, of course.
It's amazing. So yeah, I think the whole world is going to go in a different direction. I think it's going to be de-dollarization in every sense. It won't be overnight, but it's going to take time. But I think countries around the world are saying, why do we have to be so dependent on the dollar when things could go wrong with it?
That's right. Not just the dollar, but all other fiat currencies. There's another thing that I think happened in the last week that is really significant. I think it's one of the most important events, like geopolitically, and it was that SCO summit and then Xi's parade. And even Bloomberg is talking about it, and this came out today. Xi's parade and summit send a powerful message straight to Trump. They're saying here that China and Russia and the other global South BRICS countries basically saying, yeah, we're gonna stand up for ourselves, and yeah, this is it's not a unipolar world anymore, and I think that's another reason why gold and commodities in general are gonna be in high demand, and the dollar is gonna not disappear, but it's going to be like pound sterling, Clive. Did you know that it was only in 1954 actually that the dollar became the major reserve currency? Up until then, the pound was still the major reserve currency. But I think the dollar as a reserve asset is going to go the way of sterling.
Yeah, I think so. By the way, Mario, did you know that the gold and silver deliveries on COMEX continue to be significantly high? I'm just showing that now. You should be able to see it now on the screen, I think. What we're seeing here, I'll just bring it around, I'm just looking over here, is if you look at the gold and silver deliveries, so gold deliveries were only the 4th of September, and they're already 50% above last year's number. And silver deliveries were only the 4th of September, and it's 100% above last year's number.
And I spoke to Eric Young the other day, and I posted the interview last night, and he said that some people are saying, well, now it's proof that COMEX is becoming a cash market because the open interest in the amount of metals in those vaults is like 1 to 1. But his argument is that it's not as clear cut because a lot of this eligible and registered gold and silver, they're also used sometimes for the ETFs. And I saw Clive, or I spoke to someone yesterday who actually spoke to someone at one of the big banks. I won't say the bank, and the guy who works in the metals, and he said that the flow into GLD is in the last week or two has been massive. And GLD, I think, their holdings of gold, they're kind of mixed in with the LBMA and COMEX. So, yeah, what do you think about that, Clive?
I'm getting mixed messages. I've spoken with two bankers this week about gold. I mean, basically, I'm saying to them, from an asset allocation, you should be buying gold. So one of them said to me, we've had a lot of orders from clients buying physical gold bars, and the Swiss banks, they hold them in custody, so it's on your valuation. They said we've had a lot of customers buying physical gold bars, but they haven't really put anything into asset allocation officially yet. And the other bank, the person I spoke to, he said, gold, and this was his answer. He said, gold, it's done nothing ever. And I said, well, it's a record price. Yeah, but it's always been a record price, just goes down again. So really, it was very dismissive. So I think the interest, and that's two banks. And I had a letter from a third bank, which is one of the biggest banks in the world, actually. And that bank said, we now want to put gold in the mid-single digits. Those were their words. Well, I'll tell you which bank. That was UBS.
Mid-single digits in terms of holdings.
Yeah, as an allocation. So
Like
UBS
5%.
5%.
What is their allocation right now?
Well, they previously had said they recommend gold, but they didn't specify an allocation.
Okay.
But this is the first time they put a percentage on it, as far as I can see.
Yeah.
But the two other banks aren't really putting it in their asset allocation yet. And one of those two banks said they got a lot of buyers, and the other one just said it's a rubbish, it's a rubbish
Yeah,
metal.
that second guy I spoke to, I think he's a bit in denial, isn't he?
Well, he's missed the boat, of course. Having said that, the second one is very, very much into the tech stocks of at the moment of Nvidia. I asked him, "Do you have Nvidia?" And he said, "Oh yeah, tech is going to be the greatest thing in the future." But my word of warning on that is it's only a question of time before all kinds of competition comes out for Nvidia and other companies which are manufacturing these chips. I mean, a good example of that is the news announced today, where OpenAI and Broadcom are going to team up to manufacture their own chips rather than relying on Nvidia chips. Now, that might take a year or two to come, but at the end of the day, there will be a lot more competition for these chips, and all these companies will find that suddenly the market supply of what they had a monopoly on is getting bigger, and the profits might not be growing as fast as people expect.
Gold and silver remain firmly on an upward trajectory, even with the usual short-term pullbacks. The underlying driver is not any single economic report, but the weakening confidence in the US dollar and the policies surrounding it. While miners recently experienced a modest correction, they continue to trade at deeply undervalued levels compared to the potential profits ahead. As rate cuts appear almost inevitable, with markets assigning overwhelming odds to a reduction at the next FOMC meeting, precious metals are poised to benefit. The real catalyst is the long-term structural shift, demand for physical gold and silver, alongside steady accumulation from both investors and institutions. For mining companies, profitability hinges on production costs versus future prices, and many quality producers are well positioned for explosive upside if gold moves toward the next leg higher. Let's get back to the interview.
How do you see gold and silver reacting if we have a strong number, a weak number, or the market reacts negatively to it? And the miners, I mean, we've seen in the last few days that the miners have stopped. I mean, they corrected a little bit. They're still doing really well. Let's say over the medium to longer term, gold and silver have, they've corrected, but like people say, markets never go up in a straight line.
First of all, I don't think it really matters whether the number's good or bad. I think that the gold price is reacting to the greater uncertainty about the state of the US dollar. So I think that direction of travel, which is upwards with its, from time to time, its dips, That direction of travel upwards will continue, I think. So obviously that's going to be good for the gold miners, which did, as you say, Mario, have quite a dip yesterday. When I say quite a dip, it was a couple of percent down. Some were down more, somewhat less, but across the board it was 2.5%, something like that down. I would expect now, with the gold price being up a little bit this morning, I would expect them to recover. I mean, the gold price now is what, 3,548. It's only up to $2.80 or so. But it wouldn't surprise me one little bit if people don't dive back into the gold price, into gold and gold miners, which had that big dip yesterday, because I think a lot of people feel they missed the boat a little bit on the gold miners. They haven't missed the boat because the gold miners are still very, very cheap by any reasonable standard. So I think we're going to see gold going up anyway, whatever the result is. But the real focus of the market, if you want really short term, is what the Federal Reserve will do when they have the FOMC meeting announced on September the 17th, in about 2 weeks' time.
Yeah.
It's now regarded as 99.4% probability that the rate will be cut. And I see that by, if I go to the FedWatch tool, can I just
Sure.
share that with you now?
Yeah, sure.
Let's just have a look at that. There we are. That's the FedWatch tool. You can see on
On the CME website.
yeah. We're looking at that. That's showing the 99.4% probability that they're going to cut the rate on what's the date? It's 17th of September.
Yeah, and also I think last week, one of the Fed governors, Waller, he said that depending on the statistics, and by that I think he meant the number today, we could have a jumbo cut. So my feeling is that if we get a number near zero instead of 75 or even negative, we could see a 50, maybe even 1% cut, which would be jumbo. Yeah, we're going to have to wait and see. I think the markets are not going to do that much until that number comes out. And Clive, talking about miners, don't know if you mind. I asked you the other day because I was looking for a silver miner, and you gave me an idea, and I'm going to share it with the viewers. And this is not advice, or we're not even telling you to buy it. But I asked Clive because I took profit on gold junior miner that I did quite well. You know, that's the other thing, Clive. I know these things are going to go up a lot, but you need to take sometimes a bit of profit if things go up too quickly. And that's what I did. And I asked you, is there a silver miner that you liked, that you're number one? And you told me about this one, Indian Precious Metals Corp. So I bought a little bit. So there you go.
So yeah, I mean, obviously, just for the benefit of your viewers, I'll explain how they can do the work themselves in a very, very simple way for gold and silver miner. And Andean is a gold and silver miner, just to be clear. But the way you do the work, first of all, you want to be buying into a company which is already digging up the gold and already making a profit from it. Otherwise, you have a risk of buying into a company which has got nothing more than a hole in the ground. And eventually, with a hole in the ground, they might run out of money. So I always like to buy something which is already making a profit. And that's obviously one of the companies. But the other thing you need to, or hope for, is a realistic prospect of them increasing the number of ounces that they're going to dig up in the years which come. And if you look at this company, you'll see, you have to go look at the latest reports, but you'll see that there's a lot of gold and silver going to come online in the coming years, which obviously is a boost. So what I do with gold and silver mining companies, I take the projected number of ounces which we mined in the future, and I multiply that by the future gold price, which you've got to guess, or silver price, depending which way you look at it. So let's say the future gold price you guess at $5,000. Deduct from that what they call the AISC, the all-in sustaining cost, which you can find out on every gold mining company's website how much it costs them to dig it up. So let's say, for example, you've got a all-in sustaining cost of 2,000 to dig it up, but they're selling it for a future price of 5,000. So your profit is going to be $3,000 per ounce. You then multiply that $3,000 an ounce, the profit that they're going to make in the future, obviously based on your guess of the future price, by the number of ounces that you think they will mine at the future date, let's say 2027. You can work that out from looking at their accounts and looking at what the directors say. And then you've now got the gross profit. Knock off something for the other expenses like prospecting costs, marketing, advertising, and tax. If you don't know how to find the figure in their accounts, you can knock off 30%, just knock off 30% for simplicity. So you take the gross profit, knock off 30%, then you have the net profit, divide the net profit by the number of shares, and you get the earnings per share. And then you have to put a multiple on that number, which could be 10 times, 20 times, 5 times, whatever you like. And you'll find out the future share price, which you could then compare with today's share price. And that's the exercise I did for you, Mario. I've done it on countless companies. I think that's anyone can do it. It's not terribly difficult. And if you don't understand accounts, well, just find a profitable company which will dig up more gold. And you can find out that simply by asking ChatGPT. Take the last accounts, dump it into ChatGPT and say, are they going to dig up more gold next year? That's all you need to know.
Gold and silver are no longer just assets in a portfolio. They are becoming the anchor in a financial world defined by uncertainty. Across the globe, investors are quietly reallocating into hard money as confidence in fiat erodes. The signals are all around us: central banks adding to reserves, sovereign funds reconsidering allocations, and even private institutions beginning to frame precious metals as a strategic necessity rather than a speculative bet. This isn't about short-term moves of a few dollars up or down, but about recognizing the changing foundation of the monetary order. In the midst of inflationary pressures, rising debt, and monetary intervention, gold and silver stand apart as forms of wealth that cannot be manufactured at will. Their role is not confined to hedging risks, but extends to providing long-term stability in portfolios that must navigate the turbulence of currency debasement and geopolitical realignment. The opportunity here is not only to observe these changes, but to prepare accordingly. Just as past cycles elevated commodities when paper promises faltered, today's environment suggests a repeat of history on an even greater scale. Share your thoughts on MarioInnecco and Clive Thompson's analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.